Our strategic public equity strategy is very much an alternative strategy. It looks to invest in publicly quoted smaller UK companies using the principles and practices and techniques and disciplines that you would normally associate with private equity. We take a 3 to 5 year investment horizon in each investment that we take, giving ourselves the opportunity to invest through that strategic cycle that management typically look to pursue. We look to back strong management teams, and we look for catalysts in the businesses, particularly businesses going through operational or strategic or other types of change, where we can see value being created by that change that's going on in the business. We have a very engaged style, so we look to influence and to work with the management teams and to bring to bear some of the skills and experience we have within Gresham House to add value to those investments. And that's a style which has delivered very good returns for us over the years. So I guess the question is, what is the investment opportunity? Specifically, I suppose there are a number of areas as to why we see this as a very attractive space to be investing, starting with the fact that we're looking at smaller cap UK companies. Small caps have outperformed in the long term, but also at the moment you're seeing a lot of dislocation, mispricing, inefficiency in that market, given the absence of detailed analyst coverage. Research is much sparser than it used to be in that space. Many of the larger institutions have moved up the market cap scale, which means there are fewer investors in there are fewer advisors, and as a result we quite often see mispricing compared to the intrinsic values of companies, and that provides very interesting opportunities for us to invest in. So I'd say with first of all, that small cap focus is very much an advantage and a great opportunity for us. I think the second area is around having active engagement. It's being able to add value to those investments, and we mitigate risk within our portfolios by doing detailed due diligence, really understanding what it is that those companies are doing, and having a very constructive dialogue in influencing how those businesses move forward. And certainly engaged activity, engaged investing like that has been shown to generate very good returns over many years. And then I thought the other area too I would point to is focusing on value. At the heart of what we do, we have a value philosophy and focus on cash flow, cash generation, and identifying how the value is actually created within that company. So return on capital is a very important measure for us. Cash flow return on investment is a very important measure for us. And through those mechanisms, we see there's a great opportunity at the moment. And particularly given that the markets have been very momentum driven, I think the opportunity to single out and be stock specific with a bottom-up value-based approach is something which could perform very well in the coming months and years. So I guess, what is different about what we do? A lot of people say they do similar things and are looking for differentiated strategies, and I do genuinely believe that we offer something different. And I think that probably comes down to three things. First of all, it's about the time, the investment horizon over which we invest. We give ourselves the opportunity to invest through that strategic cycle that the management are managing. We give ourselves the opportunity to work with them through implementing change within the business and give it time to actually take effect and create the value. So we're less focused on what happens quarter to quarter. It's more about what's happening over that 3 to 5 year horizon. The second thing is that we are investing with conviction. So we really do understand what it is that we're looking at, and we're betting on what the management are doing. Alignment with management is a crucial piece of that. So it's around understanding what are the drivers for management, how incentivized are they aligned with the shareholders, and do they see the same outcome at the end of 3 or 4 or 5 years to what we're looking for, and that they're incentivized to deliver that same outcome. So it's about that investment horizon, it's about the engagement and the conviction, and then finally it's around the strategy, which I've already been through. It's those drivers of performance. It's the value orientation where we think over long-term value outperforms. It's the focus on small cap, that over the longer term it's the small caps which outperform. It's the focus on the strategic drivers of value and the engagement which we can actually give to that. And over the longer term you've seen that engaged strategies do tend to outperform. So the combination of all those things I think makes it specifically a Gresham House strategy, and it's a unique strategy, and I think it's one which will perform very well for you.